Welcome back. You're watching Mid-Cap Radar on CNBC-TV18. Moving on then, consumer durable companies are in focus on the back of weak sales and demands for room ACs amid the early monsoon and weak summer as compared to last year. To discuss this and more, we now have Praveen Sahay, who's a research analyst at PL Capital. Good afternoon to you, Praveen. This is Vamakshi joining in. Well, your channel checks have indicated subdued summer. Even Voltas in the recent management meet said that they're expecting 20 to 25% fall in the RAC volume. So what does this translate to in terms of an impact as far as the top line is concerned for the first quarter, and how important is the summer quarter, if you can just quantify that for us for the entire industry?
Yeah, hi. Thank you for having me. So definitely that's our channel check as well as Volta's commentary. There is a quite subdued summer, and especially if I talk on the north, there is a erratic weather. There is no consistency in terms of the heat wave or the temperature side, and that's led to the the degrowth, and especially like of a Voltas given around 20-25% of a degrowth in their RAC segment for April and May, and that's only because they are largely in the north side, and north summer were not as good as of a last year. Also, there is a base effect of a last year. Last year they had done a very strong growth of a 44%. So that is also in the background. So overall industry in our channel check also indicated that as the entire in the country there is a erratic weather, which has led to the lower demand for the RAC, and which has actually impacted the sales volume, secondary sales volume for all the players, and that largely impacted the north player, who are major market share in the north, and especially to the Voltas because of that. What that impact to the full year, because this summer account the majority of the volume, and Q4 and the Q1, and Q1 being in the slowdown, that's going to impact the entire volume, and I believe there will be difficult to give a positive number for the brands for this financial year. So that is the one take from the very strong degrowth in the system, because the last year also as an industry grew by around 30%, and being a market leader, Voltas grew by around 36-37%. So on that high base as well, this year is expected to be quite muted.
Praveen, good afternoon. Thank you for joining in. Fair to say now that FY26 most likely is going to be a washout year for these companies, because when your strongest period is turning out to be weak, you are now entering a period of seasonal weakness. So what does that do? As you mentioned, you're expecting a muted full year performance, but do you expect almost a double-digit decline in terms of the full year performance as well? Would that be a significant hit?
See, that's I don't think that's a single digit of a degrowth is what we are anticipating, because there is last year we had seen there is an extended summer as well. That has given some kind of a cushion, and prior to that, if you look at, there is a good sales in the third quarter also happened, because the inventory filling start from the third quarter. So these two further the weak quarters can give some kind of a cushion to the industry, even though we are also in the anticipation that from the 1st of January 26, the new B norm is around the corner. For that also the brand need to liquidate their the volume. That is another concern, I can say, for the industry, for the margin the way forward. So one, the season has not done well, volume were down. If the volume will pick up, definitely they will suffer on the margin as well in the coming quarters. So I think the industry expected to give a very muted numbers as a whole.
Sure, Praveen, and your channel checks also suggested that so far, in spite of subdued demand, there have been no discounts or no offers. So do you think that probably this trend could reverse? Maybe, do you see further discounts, offers from the companies, and what would be their the impact on margins?
Yeah, so as they had not taken any kind of or given any kind of a discounts or offers so far. But when we are entering to the weak quarters and the third quarter, especially when the inventory filling happened or the liquidation of the old inventory will happen, definitely they need to come up with an offers and the discounts, and that will put a further pressure to their margin. So definitely from here onwards, we are expecting that's the volume we had already seen, the margin pressure around the corner for the companies.
Now, Praveen, since you are mentioning margins, what about the inventory levels? Now, generally, if inventory levels are low, you would view that as a positive because, okay, there is enough demand, that there is not enough inventory. But here, inventory levels are low because there is not enough demand here. The demand is low, and even Blue Star in one of our earlier interactions had mentioned that production has been impacted. They have cut down on production because of the lack of demand. Is that a cause of concern because of the fact that you are now entering this prolonged period Q3, which is generally technically winter months? Do you see this inventory levels remaining low going forward as well?
So you were rightly mentioned that the two things to that. One is inventory level of the channel and inventory level of the brands. So why the production has been curtailed? Because they are carrying on the higher inventory. One. And second, the demand is not there in the market. So dealers are also not keeping a very high inventory at this level right now. So the way forward, when these companies or brands will come for a liquidation, their old inventory, definitely that will be a big problem for them the way forward, because from 1st January 2026, the new BE norm is going to get implemented, and that will further increase around 1,000 rupees cost per unit. So those are again challenging quarters way ahead, I believe, to taking on a price hike because of a BE norm change or the muted demand we had already seen in the summer, which will keeping the brand at a higher inventory. So those are the reason, and that's why I'm concerned about the margin for them.
Sure. Thank you so much, Praveen, for joining in with us and giving your take on the current situation in the RAC market. But let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned.